let's go and take a look at where we are. Right. So in the last 16 hours, the market's made a high, it's made a low. It's a red day, according to today, but it's also inside of yesterday, right? So we have an inside bar. The inside bar, or sorry, the outside bar, the biggest bar is green, right? So the current measure bar is green. So we should assume bullish. And together, the two bars, the last 2 days, are within an even bigger outside bar, right? So now when it comes to highlighting your risk, you have two floors, you have two ceilings, right? We could bounce off one or both, right? So think of it this way. You have to break resistance in order to move higher up. You have to break support in order to go down, right? And then because of the probability that is assigned to this pattern, right, we have to assume the mother bar. So the mother bar is green. We have to assume bullish. That's where the probability lies. Anything can happen, but in this condition, I have to be a bull today, right? So when I look at this under a microscope of sorts, and I look at it in an hourly scale, we can see in the last 16 hours, the high was put in first, the low was put in next, and we've been moving off of the low since. Right? So this is adding credence to my bullish bias. And now there's that resistance we already knew we needed to break through in order to keep going. Right? So this is our first question mark. This is the first time we have to ask ourselves, is this going to break or is this going to bounce? Right? My showing up on schedule on time every day puts me in a position where I can assume, based on where I am on the daily candle, off of the low or off of the high, and moving in one direction versus the other, I tend to play that until the next move comes along, right? So I'm building for the next move, right? So if I think it's going up only to see it come back down here, I have to be bullish until I can become a bear, right? This is too cheap to be selling as a bear, right? Compared to where we are in the range, right? So let's go take a look at this idea on a 5-minute chart, right? And then because we suspect we're pushing off of the lows and we are trying to go higher, we're going to draw the ladder like we do every day, and then let the ladder tell you what is actually happening. The market going through this ladder is giving you a clue, right? It's giving you an idea that, hey, I'm going up the steps and not down the steps, right? And you're just with your mind's eye connecting the dots, right? You're trying to figure out where most of these wicks and most of these bodies connect, right? Stuff like this here, wicks, bodies, wicks, right? So that's a nice clean level, right? And then off of that, you can see other levels. You can see levels above. And then if you look high enough, you eventually, or you may have nothing to look at, right? There may be nothing on the left here. So that's when we have to watch the market and, react accordingly. Right? So this is just telling us where possible action points might be based on where we've been already, right? And looking forward, I do the same thing, except now I have to look a little bit further left to find these action points, right? Levels that I have to do something at. That something might just be ask myself a question, right? And actually do nothing with my physical mouse, right? But it's still where I need to ask, right? So it triggers a reaction. It's a call to action, right? So now we've determined the ladder. We've determined what ideally our bias should be based on probabilities. It's an inside bar, right? And we're inside of a bullish measure bar. So we must assume a bullish bias. And so with that in mind, I came to the computer. I did this top-down analysis. I did it at about 5:30 or so this morning, and I bought at support. Right. And so these trades are running. They're swing trades, no target, but I do have a stop loss. Right. Each click has a 36 pip stop. And so now these trades are open, they're running, they're maybe one, two, they're almost 3 boxes away from the entry, right? This is the entry average. I'm one, the market moved 2 boxes off of my entry. And because these have a 36 pip stop and I want them to be swing trades on purpose, I'm going to give them a 36 pip of runway, right? So they'll become 1-to-1. I'm risking 36 because I'm trying to make 36, right? And then as this is unfolding all by itself without me having to deal with it, I'm going to start making my 3 pip, 3 pip, 3 pip cash flow trades, right? The reward trades, the ones that I'm focused on as a rinse, wash, and repeat, right? The 3 pips, 3 pips, 3 pips is generating an influx of small, repeatable, achievable rewards, right? We're going around picking up dimes and nickels, right? At the end of the week, all those dimes and nickels make dollars. And we're doing it on schedule, right? The swing trades that you see here, it's only because I'm an opportunist and I saw support at the right time of day. That's it, right? So that's one plan. And here we are now learning how to trade for, the real 3 pip deal. That's what you came here for. And so if I'm a bull and I understand that I'm off of the high, this current high, by 1 standard deviation, that's a good place to buy, right? So I'm buying for a 3 pip target. And that particular trade is now trade number 1 in box number 1. And if it falls, it will go into box number 2. And box number 2 entitles me to 1%, right? Each box entitles me to 1%. And so here I've only clicked one portion of my 1%, which belongs in that box, right? Unless I fall down into a lower box, I'm going to keep recycling that same 1% that I have access to. I'm just waiting for an opportunity to open another click, which I have 3 left. Right, so like right there. So now there's 2 clicks in box number 1, right? This is, if this is box number 1, which it is, I've just put 2 trades in it. And I'm waiting to see if the 2 trades will bounce off of this mathematical support. Right? It's a measured move. That's all I'm expecting to see. It's a probability, right? There's a high probability of a bounce right here, the bottom edge of the box, because of the standard deviation that the market has already put through, right? If it decides to go through a second box, that's 2 standard deviations from that high. Imagine a Bollinger Band. That would be going from one side of the band, crossing the center band, and ending up at the lower band. Right? So that's the kind of mindset. This represents a Bollinger Band, except I have an end to it. And there's a call to action if the price gets here. Right? So I'm measuring volatility, and I'm doing it through this stuff. And through the boxes. The boxes don't change. They're just a frame of reference. And they're helping my mind see the facts for what the facts are. Right. So just to touch on things for the latecomers, right, we're trading an inside bar. It's inside of a bullish bar, which is itself inside of another bullish bar. And so we must assume a bullish bias. And as long as the low holds, the bullish holds. the bullishness holds. And so ideally we want to be sellers, but from higher high. And what we're looking to sell into is slightly bigger than the mother bar, but it is overall still resistance. And if you do a Fibonacci on this, it should be near 50 or 60. There it is, 50. Right. So that's what we're trying to do. It's the positioning within yesterday's candlestick. Right. So because we're inside of that inside bar, the probabilities are lifting all the boats. Right. The lows held, and we're expecting to test higher highs. And here we are. We just made our first winning trade of the day. Right. So if I can see another red candle here near the bottom of the box, remember it's a measured environment, right? I'm measuring from the most recent swing. The box is just my favorite pair of slippers, right? Not too tight, not too loose. You can see moves that are way bigger than the box and moves that are smaller than the box. Right? But the box is just a half of a Bollinger Band. Right? It allows me to see what price is doing in that standard deviation, how it's behaving in a standard way or not, right? Something like this. Now, testing support, look left, right? We have support here, right? That's a trade, right? The probability is that if this is truly support, which I'm assuming it is, price will bounce, right? And therefore, I'm only testing an assumption. If my assumption is wrong, the price will continue to drop, and I'll be testing further support, which I'm willing to test with another trade, right? And you'll notice the trades are minimal. They're tiny, 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 and I'm stacking them like coins. And so I'm risking the same amount of money in risk, but I'm not doing it all at once, right? And there we go. Our assumption was proven correct, right? This was support. Let's try that again. All right, so now we have two winning trades. Actually, three. I think I put two on this first one. Okay, so, and we need to buy when stuff is cheap and preferably at support, right? So a red candle near a support area, right? With this bias idea in mind, this idea that we're within an inside bar and we're hoping to break to the upside, right? That this is what we're inside of, right? Yesterday is inside of that, and today is still inside of that, right? We have yet to break yesterday's low or break yesterday's high, right? So we have to assume that the mother bar is still the measure that we must measure against. No. So our assumptions are right here, buying at support. I'll put 2 clicks there. Right? I'm allowed 4 per box. It's actually 5, but I want to round down, and I've got 3 already. All right, so that's excluding the swing trades that I have from 2.5 hours ago. All right, so now we're coming into box number 2, right? If it falls into this lower box here, it now entitles me to spend percent number 2, which belongs in this box, right? I can't just click it away. I have to see a reason to click. So this would be a good reason to click right here, right? Here's that plan B we were thinking of, right? We bounce once right here. We made our money. We're hoping to bounce from here and make a little bit more money, right? So my assumption is I'm testing support by looking to my left. And whenever I find that support, the trick to the game is to buy it as close to the actual level as you can, right? You want to be as precise as you can with the actual entry, but the box is giving you the ballpark, right? So look left. You'll find the level you're looking for and exercise a little bit of patience, right? Let the price go to the actual line. If it doesn't get there, you might have just saved yourself a big, big, big hassle. Right? We don't know the future. This is the key to this strategy. Not knowing anything forces you to behave a certain way with limits all around. Right? So here we are hoping to repeat some of these trades. Right? I still have my swing trades below, and I'm positioning myself to make higher highs in time. Right? The calendar is empty for us, and so we should expect uh, low volatility, not crazy moves. This idea though of not having news on the calendar still opens the door for anything, right? It doesn't mean, oh, today will be an easy day. It just means today is not news driven. Right. So here we are closing more winners. And if I can see a red candle coming back to the bottom of this box, I will reopen it or reopen the existing trades and the ones that just recycled. So there's that red candle. I was looking to my left, sorry. I should have clicked. Let's stay focused, John. Stay focused. There. So I see rejection, right? We see a wick here. If the next candle or the current candle can push down a little bit more, I would buy that. We are at resistance. I want to be buying support. And so I want to buy when it's cheap. So, ooh, I just saw it right there. If it drops a little bit more, buy a little bit more. Right? Just like so. Right? There we are. Red candle. I've already put my 4 clicks in this box, but you can see the point, right? Every time you get an opportunity to buy it cheap, put 1 click on there, right? Because they're allotted to this. That's the job that we've assigned to those 4 or 5 pieces. We have to spend the 4 or 5 pieces as we see fit. And this is exactly what we're hoping to see as a trigger, right? And then the bounce off of support or resistance makes us money within a few seconds, maybe a minute, maybe 2. And you'll notice when the volatility starts to shrink or when you're approaching lunchtime New York, the bars themselves are shrinking and you have to consider the end of your day is near, right? You should have been finished by then. So here we are waiting to see if our assumption was correct, right? We almost made it. We have to cross the spread in order to make money. So it's not just touching the line that counts, it's crossing the line. Right, so I'm waiting to recycle my open trades. While the swings from below are still open. All right. So our strategy is consistent it doesn't change day by day. Our execution is tested each and every day, and it's based on the conditions that you're faced with, right? So by not changing the actual strategy, the parameters, the default settings, it becomes less. I have a lot less anxiety about having to have the right size or having to have the perfect stop loss or having to have the perfect everything. No, I've settled for the average of everything, and I use an average as a target for everything. Right? I have an average size, an average target, an average stop loss, an average box. I just happen to show up when it's the best time to trade. Right? And that's positioning also. It positions me on the daily candle at a certain spot. And from that position on the daily candle, I can appreciate what has to be done next. Right here, we want to buy, right? Recycle the trades that just close. Right? See that red candle here? You're a buyer of that. Right? If you look to your left, you're buying support, support, slash resistance, slash support. Right? You're buying all of this stuff here. Right? We have the money to spend. It's already allocated for this risk. The risk has yet to be presented, right? The actual opportunity to click has yet to show itself, right? So I'm only allowed 4 or 5 clicks per box if I round up or down. But this is it. I don't want to put 20 clicks in one box, right? Because that would be putting all my eggs in that one basket. And because I don't know what's coming next, I might be a fool to do that, right? So I'm better off to just slow down, pace it out, take a deep breath, understand what's unfolding, and behave accordingly. The top-down analysis is a way of lowering the opportunity for error, right? It doesn't make it 100%. You could still be right, and it changes in 10 minutes. And you don't change along with it, and now you're screwed. Here's box number 2. I'm going to spend percent number 2 or sum of percent number 2. Right? So if it can get to this level here, I'll buy that. Right? I've already put 1 click in box number 2 here, this bottom box. And so I'm willing to put another 3 or 4 in this box here. I don't want to fight the top-down analysis. I do want to keep an eye on it to make sure I'm not wrong somewhere along the way. And I disregard being wrong. I don't want to disregard being wrong. I need to find out as soon as possible. This is what the ladder helps us work with. Right? Every day I show up on schedule, and between the hours of 10 o'clock Eastern and 10:30 Eastern, which is when I show up for start to trade, I've experienced some kind of a pullback. And that pullback is usually going to end in the original direction of the trend, right? It's the definition of a pullback. That's the top-down analysis. And then by showing up on schedule, I know where I am. I'm in a pullback. I need to figure out the direction and then play what I assume is the direction. It's just the probability. Right? And then when we see stuff like this, when we understand the probability is to go up, but we're faced with red candles, we know what to do here. Right? These are buying opportunities. Instead of panicking because, oh, it's red and my plan is green, I'm using red as an opportunity. Right? It's in my brain thinks this is a valuable opportunity presenting itself instead of something scary or mean. Right? I want to take advantage of this. Right? So situationally, what you're trying to do is put yourself in an area that you recognize, like driving to work every morning. Right? You follow the same road. You could probably drive to work with your eyes closed. right? This is what happens when you show up to work on the markets at the same time of day every day, right? For me in the Forex market, I'm looking at the previous 18 hours to see how the next 8 hours are likely going to go. And of those 8, I'm only trading 2, if that, right? So I'm really narrowing my focus. Here's an opportunity to buy right here. If it can get to this level, I'll buy. Right? I have the money allocated for this particular job in that particular box. I just need to see that particular trade come to this particular level. Right? This is where the patience and the discipline and all that good stuff comes in. Everything we weren't born with. Right? So here we are. If it pushes down a little bit more, I'll take a second or a third trade there. Right? The reason why I took that particular one is the level here, this right here. Right? If it tests to this, I'll take more and more and more. Right? And then we have boxes upon boxes. We can actually test 4 boxes worth. Right? So I'm not giving up on my bias. I'm not assuming, oh my God, I'm so wrong all of a sudden. No, I'm just experience a pullback. This is a normal environment at a normal time of day, which I would expect to see because I've done this now for years at the same time of day, right? Anything can still happen. I could be totally off the mark, but odds are, the probabilities are that it's similar to yesterday and the day before and the day before. Right. So I'm going with assumptions and I'm testing my assumptions and I try to do those tests as cheaply as possible. Right. And I try to repeat the tests as often as possible. Right. That's the definition of large numbers. Right. I need 1,000,000 trades in my 20-year career, not 10 trades per year. Right. So we tested support right here. It looks like support is holding. Right? We have a green candle off of that level. And if it does hold, it will keep going up. If it comes back and retests that level and fails, I have an entry in my mind waiting for this level here. Right? And I have another entry for this level over here. Right? All I'm doing is testing previous levels and places where price has been before. And it's done with an assumption, right, that it will bounce off of that. If we find our way, making lower lows and breaking yesterday's low, everything I'm doing here is wrong. And I have to face the facts and maybe become a short. Right? But that is to be proven. I can't jump the gun. I don't want to bail on my long trades before I'm proven to have been wrong. Right? And even that might be short-lived. It could maybe break 2 or 3 pips and go right back up again. That's the commitment you have to make, right? You have to commit to doing the right thing. It can be tough. We are waiting for bigger news on the calendar, and I think that's what the market has in store for us. Right? If you go down to Thursday, core inflation, inflation, CPI, jobless claims, continuing jobless claims. And so tomorrow is the killer day. And I think today is just everybody's biting fingernails. Right. So we're building a position in a pullback, right? The pullback hopefully will find support in this area here. And if we measure this, Fibonacci tools and stuff, we would be near 61% retracement. Near 61% retracement. And if it fails, we'll find out soon enough. And we'll be making a lower low, and then we'll be making moves towards our stops. Right? And because I am within this inside bar and I have this probability, I have to assume the probability is dominant, and I'm going to play that dominant factor until the proof is in the pudding, and I've been proven to be wrong. And so we know by defining this stuff up front, right? By defining it up front, right here, right now, take a trade if you can afford it. Okay. And so in total, my swing trades, I have, I think it's 12 positions on the swing trades. They're all O2s. They all have a 36 pip stop, and I'm looking to profit about 36 pips on those swing trades also, these ones down here. Right, so I'm looking to go from this area here, maybe up 3 or 4 boxes from where we are right now. Right, so I would expect something to go back up and do something like this. And then eventually I want to be a seller like it shows over here at 1-1. Right around there. We'll make that one red so I can see it later. Oops. Anything can happen. And that's the best part. 1, 2, 3, 4, 5, 6, 7 boxes. Or we break the lows and we go down multiple boxes. Okay, so let's resume. I'm building a position in box number 2. And as such, as a bull, I'm allowed box number 3 if I need to, and I will eventually be forced into using box number 4 maybe. Right? And if I have to go and put trades in box number 4, it's the last chance I have to find that bounce I'm looking for before the market starts to cost me money. Right? So it's this building for the next move. Right? The market is falling in a pullback, which happens to be on schedule. And myself, I'm buying because I want to be a seller from higher. Okay? And so that's the thesis for today. That's kind of what I'm working on. And it's only because we have expectations, right? I expect, what's the word? Consistent behavior, right? 3 to 4 boxes, 3 to 4 boxes, 3 to 4 boxes. The direction, I don't care. It helps, right? It helps eliminate errors, but it doesn't make me more or less money. It makes it more or less easier to gauge, right? If your boat is being lifted by the tide, you're not fighting anything. Right? So I have this idea that I want to be bullish, and my job is to test support. And any level of support, let's go and check the ladder that we built earlier. Remember that ladder? This is what it looks like. Right? We've come from the high 1, 2, 3, 4 rungs as expected. And this is where we want to start, participating as a bull. Right? It could continue to drop. And like I suggested here, if it continues to drop, we have the money to play with. We have the money to continue to follow along. Right? We're not giving up. Right? I'm not giving up on being bullish until I'm absolutely proven wrong. Right? So I'll be a bull all the way to pip 35. Okay. And so if I'm wrong, I'll find out in about an hour and a half to 2 hours. I'll know sooner than later if we're breaking the lows or if we're bouncing off of support, which happens to be the inside swing, right? So where we are right now happens to be the inside of that swing. And if it fails to hold, we might be testing the outside of that swing, right? So that becomes plan B, right? By having plan A, you're trying to make money. By having plan B, you're trying to protect yourself from the unknown. By having plan C and D and E and eventually a stop loss, you're planning to stay in the game for a long, long time. And this is how we do it with tiny, tiny, tiny positions. Okay, so we don't want to fight what's happening. We want to recognize that it's happening and it happens to be on schedule, right? So putting two and two together, I tend to play what I see as repetition, what I can start to trust. And by showing up on schedule, I can start to trust what I see here more so than what I ignore the other 22 hours of the day that I don't look at. Right? It's that commute to work, right? I recognize this environment because I drive it for 2 hours every day. Anything can happen still, right? But this is where plan B, this is where boxes 3 and 4 come in, right? This is where the psychology of trading, right? The better loser wins. It's not the better winner wins, it's the better loser. Right? You have to learn how to lose. And we're doing it within units of measures that are affordable to us on this particular time frame. Right? If I traded this methodology on an hourly scale, my stop loss would be 4 boxes from an hourly scale, right? So my stop loss would be huge, way more than 36 pips, right? And so I'm not trading those higher time frames because I don't want to take those bigger risks, right? I'm trading the so-called noise because it is building the 5-minute candlesticks and the hourly candlesticks and the daily candlesticks. And this so-called noise is real price action. And it makes us money. Right. So it's how you perceive the risk. And then with these little boxes, you get to appreciate that that risk is manageable. Right. You can see that white line here, that dotted white line. That's the average of all my expenditures. Right? Everything that I spent so far is averaged right there. And I'm right on the average. I'm a pip away from remaining in the money. Right. So I can move this line by closing winners or closing losers. I can also move that line by adding trades. Right. So I'm engineering where that white line is, and I'm doing so that the market itself can trip over it. All right. So by moving that white line at my discretion, I can engineer how the trades will close. Right? I don't need to rely on the market going to the stop loss to tell me I was a loser. Right? I give it all that space, but within that space, I work my ass off trying to break even, right? Trying to create a situation like this where I can overtake that white dotted line, right? And turn things positive, right? So ideally, my job is to keep the account on the positive side. And even if it means I have to lose a couple of winners from earlier in the day, right? So give and take is normal. And we do this give and take within 4 boxes, preferably the give, giving back, losing. You want to lose in box number 2, right? Because that is the cheapest place to lose, right? It's like having a 1 to 2 risk to reward ratio. if you choose to fight like what I'm doing here, I choose to use boxes 3 and 4, and as such, I will be targeting a break even, that white line, at my discretion, right? So as the market keeps falling, I keep adding trades, I keep moving that white line, I keep engineering an exit that benefits me. So let's remove this along there, and then zoom into that and just wait. All right, so I've already spent the money that belongs in box number 2, and so I'm just waiting to see if we end up in box number 3 and put the money that belongs there too. Right, it's money that's allocated to doing this job. Right, it's meant to do this task. So I'm leaving it to the market to deliver the results. Right, I'm just here to manage as it's unfolding. Right. Let's see. We're still at the inside swing. Right, that previous low here, we're testing the inside of that swing area, and we're hoping it will hold, and we're hoping the ladder will be tested to the upside. Right, so according to this circadian rhythm that I've experienced a few times, this should be a pullback, right? And it should resolve to the upside. Anything can happen. So the probabilities are one thing, the facts will be something else or the same, and we'll find out soon enough. Right, here's that inside swing test. Right. So we get to test the outside swing. Do we get to test this lower edge? Are we making a lower low on the day? You know, that's the kind of stuff we ask ourselves. Right? If you have the money to play, if you have the willingness to fight, which is kind of what I'm showing you here, right? If I'm willing to do, which I am, is to spend money in boxes 3 and 4, right? And ultimately, the goal of this is to find a move that looks like this, right? So here we are testing the low, and I'm now in box number 3. I want to place trades here. It pushed out too quickly. If it comes back down, I'll place trades there with a 3-pip target. You notice my swing trades are now in drawdown. Right, the swing trades that I took back here hours ago, they're now in drawdown. Right? But I'm not giving up on them. Right? I still have this idea that a higher high is forthcoming, and I'll be selling from a higher high in the next couple hours, maybe. Right, so the plan is executed, the plan is moving along. You know, ideally, I'm here for hours, and I'll be managing the swing trades with time, whereas I'm managing 3 pips, 3 pips, 3 pips with 3 pips. Right, so I'm either trying to make 3 pips, or I'm trying to make as much profit with time. Right, so I'm here for 1, 2, 3, 4, 5, 6 more hours. Right, so yeah, I'll be managing my way out of these trades one way or the other. Right, and this is it. Not knowing the future, but relying on the probabilities. At some point, the probability slips out of reach. It's no longer feasible. Right, we know that is right here. Right, so I'm allowing for this to happen. Right. This is not what I'm looking for, right? Something like that. Maybe not that angle, right? But direction. Being forward looking, the next move is where our money comes from, right? Not the current move. A lot of people are trying to sell this because they think, oh, it's falling and it must be falling to the South Pole. And what we're doing is looking left. We're assuming that a bounce is a better odd, it's a better probability than a break. And we're trading off of that probability, right? One, is there one here? Yeah, 1, 2, 3, 4. We did 5, 6 rungs on our ladder today. Let's see what happens next. Might make it ever so slightly lower low. Just enough to, screw a lot of people over. And then we'll watch it go up. Could be totally wrong too. And the thing just fails. Right? And so what if it fails? We start booking losses. So all we're doing is spreading that risk that we have access to, and we're spreading it over time, right? Every time the market gives you a probability or a location, a possibility, take it. Test that possibility. Right? If the test is valid, if the test works, if the strategy is, uh, unfolding properly, then the proof will be there for you to make money off of. Let's take a line off of here. And let's take one off the bottom. Oops. So I want to see the inside of this swing. And then I want to see the bottom. Here we are. Oh, let me remove that Fibonacci. It just gets in the way. Right, so that's the inside swing, and that's the lower low in our box number 3. And we're still playing on the long side here, bouncing off the inside swing. Right, so this is now box number 3 for me. And I just put 2 clicks in it. I have 2 clicks remaining for box number 3. And then I'll have 4 clicks remaining for box number 4. Right, I'm still looking for a move in my favor. Right, and so resistance is what I'm targeting eventually. Right, for the time being, I'm picking off support because I do want to sell when things are much higher. We're just exchanging time for money or money for time. All right, so there's that inside swing. And here's that lower low. And we also have, I think we have support somewhere 1880. Or sorry, 0880. Yeah, right. 9. Then the lowest of the lows right here. Right? We have a long way to go. If we're wrong, we'll know right away. Right? We will know on the outside of box number 4. This might turn into a 2-hour recording. Right. So I'm just looking to see if I get an opportunity to test the lower low. Right here. The crazy part is chasing stuff like this works in the moment. It works for a bar or two, and then you're compelled to stick with that trade, and then things reverse. The chase is over, and now you're stuck. Now you're stuck holding the bag. We kind of anticipate that behavior. We may be totally off. This could keep coming down, right? But the expectation is that the bounce, which held multiple times, right? We might be testing in here, right? We might be testing in here and lower. Nobody knows for sure, right? So ideally, what you're trying to do is spread your risk, and you do it as evenly as possible, right? We're building a position, right? The position is to allow us to sell from a higher high. And it's because of this. Let's go back to the daily. Here we are testing the inside of the inside bar. So let's see what happens. It might actually make a lower low just to piss a lot of people off. Right? All we are doing is setting up a probability based on mother bar, right? The measure bar. The measure bar has a ceiling, it has a floor. And since that measure bar, we've created two ceilings and two floors. We're testing one of those two right now. Let's see what happens next. Let's go back to 5 minutes and check out the ladder. All right, so we've completed the ladder. There's probably a wrong in the middle here. So now let's ask ourselves, are we continuing to go down, or are we going to start to climb back up? Right. So if we measure things, this is now 3 boxes exactly. Right. We can see that visually on the left. Right. So that would be a normal pullback, a normal retracement, a normal move. And so we participated, right? We bought all the way down. We have an average aggregate price, which is 10 pips away, right? So we're only 10 pips in drawdown. We're not hundreds of pips in drawdown. And 10 pips can be done in a blink of an eye, right? We're literally 1 box away. So the stress, the anxiety, all of that stuff is minimal at best, right? Everything we're doing is within context and in our control. We're not forced to do any of this, right? You can choose to start booking losses at any time here, right? If I want to, I can take a loss right up at the top here, and that break even will drop and making it easier to access. So like if I book 2 or 3 losses, same thing, right? The break even keeps dropping, making it easier to overtake. That's all I'm trying to do, right? I'm engineering an exit. And ideally, the exit in time will be better than what my break even is. Right? So we're just using time, we're using positioning, we're using probabilities that we are within, the daily range. And it should suffice. As far as the probabilities are concerned, we don't want to have uh, a lottery ticket. This is lottery enough. You want to use probabilities, and you can see here we've done 45, 40, 46, 45 pips. An average is 70. There's a lot of work left to be done here. Right? It can happen to the bottom, 3 more boxes. It can happen to the top, 3 more boxes. Right? We don't know. You just got to prepare for both. And what I've done is I've prepared for the bullish side, and I'm ready to survive the bearish side. Right? And so if it gets to right around here, I have a choice. I can hedge the entire position and then fight to recoup that hedge, fight to recoup that drawdown that's locked. Or I can just book the losses and make that money back over time. Right? Both, whether I'm hedging or I book the losses, will force me to use time as the next my next move. Right? So if I book losses, I need time to make that money back. If I hedge, I need time to eventually unhedge. Either way, I'm working with time in mind. Right? The boxes are standard deviations, and the outcome of 4 boxes is a standard move. Right? So if it goes back up to, let's draw a line right here to right there. Right? So if it finds its way all the way to the bottom of box number 4, a standard move out of this would take us back to box number 2. Right? So by me spending money in box number 4, I'm also bringing down that white line somewhere near here. Right? So I'm not giving up on the probability of the bounce. I can't until I'm in box number 5. And box number 5 is now either hedge or loss. Right? So we are operating in a defined space. It's what's happening in that defined space is never the same from day to day. Right? I'm always defining it in 4 boxes worth of risk. But yesterday the boxes were stacking up, and today the boxes are stacking below one another. Right? So I'm still maneuvering in the same direction. I'm still doing the same thing. I'm just doing it with a couple hours in mind. Right? I'm looking at this as the next move. Right? I don't think this is going to the South Pole. That's the message for today. Right? So here I am in box number 4. I have clicks left from box number 3. Right? I have remainder, I have carry forward. And so I can put some of those trades in box number 4. Right there. Right? So let's call this finishing box number 3. Right? I put 2 clicks that belonged up top. So now I have 4 clicks for here. And you can see the white line is already approaching the middle of the 4 boxes. Right? So I'm going to spend money here that belongs here. I'll maneuver the white line somewhere closer to the current price. And I'll be able, hopefully, to get back above there with current normal price behavior, right? No news on the calendar, nothing erratic, to force us to do stupid stuff. Okay. So we know what to do. We know how to do it. We know when to do it. We know why to do it. Are we actually going to do it? That's the problem we have. Go. All right, so now we're clearly in box number 4. And this is where you want to be spending that money that you have access to. All right, so going down to our 1 hour, look at that. Is that going to the South Pole? Right, we're still in our defined space. I'll take 2 clicks there. Right, the white line moved down a little bit more, and I'm still left with 2 clicks remaining in box number 4. Let's see what comes up next. If we have to lose, we have to lose, right? That's part of the game. But you don't have to lose all 4 boxes at once, right? I'll be losing my box number 1 and then box number 2. I'll be losing layers at a time. Good place to buy right there. I'm looking to my left over here. This area here. Right? That's what we're buying into. See? Trend traders are in love with this. See, where's that wrong? Right there. Right on the edges of the box would be a really good place to spend a little bit of money. What are we at now? Let's measure this. We are at 36. Right, we are at 36, right at the top of the hour, in time for the UK fix. Let's see what comes next. Right, so I'm just putting that there as a reminder, but let's see it in real life instead. Right, so we're building a long position as the market is falling to support. We don't know where support is, the real support, the one that will cause the bounce, but we're testing for that as an assumption, and we're using boxes for the test, right? And we're aligning ourselves to spend the money within boxes, within limits. And so by having an amount of, like a budgeted amount of risk, you're willfully taking that risk as appropriate, but you can't spend more than that, right? So it's the saving idea. You have to save the clicks, right? And you know, carry forward, recycle, do stuff like this, right? Boom. Right? Keep building up that, you know, these little stacks of coins. At the end of the day, at the end of the week, at the end of, you know, your trading session, you have dollars worth of coins. Right? Let's see what comes next here. Right? So we broke out of that box right there. It broke out of this second box with all this unused time not spent in the box. And so it gave us the idea that, okay, because we're not wasting our time sideways, we must be going down. And the market gave us another box. And same thing, because we're not wasting our time sideways, we must be going down. But here we are, unable to go all the way down. Right? So let's watch what happens here. And if we're unable to get to the bottom of the box, there's a very good chance that we're heading back up, right? The inability to fulfill a standard deviation is a clue, right? We've done standard, 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 right? We've done standard deviations over and over. And as we speak, we seem to be unable to fulfill a standard deviation, right? Take that as a clue. Right? We're not trying to, we can still be totally wrong, right? It can still just drop and keep on dropping. That's why we have an ejection seat, right? But we also have a plan. We have execution. We have money to execute with. We're not giving up until we're proven or forced into, ejecting. The strategy gives you this freedom and the choice to fight like I'm doing here, or to take losses in box number 2 like we discussed earlier. Right? I could have been reversing everything up there. Right? I chose to fight, fight, fight. I chose to play the probability on the daily chart. Right? The probability on the daily chart is that this measure bar right there, the biggest of the bars, is still valid. It's still green, and we're still trying to go up. Right? And I'm giving myself until Thursday's news to get this done. Right? So ideally, this is a measured environment. We'll find out soon enough, and we'll be able to recover from this drawdown, right? Work in progress. That's all it is. This is just work in progress. Right? So, yeah, it looks scary because, oh, we're so close to the stop losses. It's a defined space, right? And so this is defined ahead of time, and I just have to execute based on the reasons, right? The reasoning behind the definition. It's probability assessment. It's a probability driven type of process, right? Right. Let's just see what happens over the next hours or so, right? If we review the axioms, this looks like axiom number 3, right? It's slowing momentum. Right? So what should come of this? Maybe we find support, and from that slowing momentum, we have a reversal. Okay, so expecting the unexpected is what we do best. You create plan B, you create plan C, you create this willingness to use 4 boxes when you're supposed to only be needing 1. Right? So you're making your money in box number 1, or you're building a position that will eventually pay off. Right? You're exploiting drawdown. And this exploitation is not random, right? These are standard size box. It's the same box I use every day. It's the way that I behave around these units of measure, right? There's a call to action on the 3 sides of the box, and it's always the same call to action, right? I don't change my behavior. I'm either adding to my winners when things are working my way. So by recycling, I have more wins. if I run out of time, I'm assuming the market is changing direction. I'm assuming something is afoot. And if I'm just breaking the box with time remaining, like it did here, I'm assuming more of the same is forthcoming, right? By not using the time, the market gave us pips instead. And here we are trying to get to the bottom of the box. Right. So that's what we're waiting for. Right. There you go. Right? If we get to the edge of the box, boom, we may be forced into taking some losses today. Right. An alternative would be for me to go and put in a sell stop, and I could probably edit that sell stop and make it the exact same size as the rest of my positions. All right, so 0.34. Right, so now I have a sell stop to protect the lows, and as such, I want to be removing all of the stop losses. Right, because if I keep the stop losses there and I remain hedged, right, if I remain hedged and I trigger the hedge along with the stop losses, then I just doubled the risk. And I don't want to double my risk. Right, so if I'm going to be using hedging, I'm going to be removing the stop losses. And that's what I'm doing here. Right, so now that sell stop right here, or sell limit, sorry, is supposed to trigger my entry if things go horribly wrong, right? But I'm still participating. I just closed one trade. I'll recycle that trade. Right? If it comes back down to the edge of the box, I will definitely recycle that trade. Watch it come back down. Come on. Let's see a little bit of red there. Boom. I just recycled. Okay, so let's see what happens in the next 45 minutes or so. I'm curious how this will, behave on the way to my break even. Remember, this is break even for me, right? That white dotted line here. And every time we close a trade between here and that dotted line, the dotted line will move. If I recycle that closed trade, I can bring back the line towards, my favor. If I want to, I can probably move the targets. I would rather just recycle the trades. Okay, so where are we now? Right. 1, 2, 3, 4 boxes from the high, right? So from this most recent high right there, we have dropped 4 boxes to the pip, right? Literally to the pip. And we are now playing the long side, right? And since I'll be here with multiple students the rest of the day, I'm going to be hedging if I have to stay trading. Right? I have the ability, I have the time, I have, the skills. And so I'll be protecting my bottom if I must. Right? So let's see what happens, right? We just closed another trade here. So let's recycle that trade, right? Red candle. At support, any kind of support, this area here would be a good place to buy. Right? Just like that. Okay. The 4 standard deviation is a key factor to this strategy, right? The 4 boxes. It allows me to understand what a normal move is. And then if it's beyond 4 boxes, it, in my mind, is not normal and I must react appropriately. There's something for me to do with that information. And then, it could be hedging, it could be taking a loss, right? When we broke the edge of the box there, I started appreciating the fact that, hey, something's afoot, right? But now that we're bouncing and holding this level, that's beautiful, right? It's now the bell curve playing in our favor, right? We found the top of the bell curve and now we're sliding back down. I can show it to you this way. All right, we found our fourth box and now we're coming back down. Right? So we understand where we are, we understand what's happened, time of day is in line with our expectations, and the result of such behavior is now that postponed gratification, right? We're finally going to get paid for this work, right? For taking this risk, for being upside down for an hour, we're going to finally get paid for that. And that would be, my expectation. That's the probability that I've built. Right? And I did so spending money allocated to this risk, right? And I did it over time. I did it as I saw fit, as I saw the actual trades building, and some of those trades closed along the way. That's the idea. I'm here to generate this cash flow system. The swing trades are a side plan. It's like a sidekick. I'm here, I see the opportunity, why not? Right? What I'm teaching you here is managed within boxes. It's not swing trading. And I guess you could call it, micro positioning. We are positioned on a microscopic scale to take advantage of the next move. Remember the next move, right? This. Let us get paid. Bunch of hardcore traders in this room. 18 of us here for 2 hours. Woo! Love you guys. It's awesome. Yay. So let's recycle some trades. All right. Red candles. Buy support. So what do we see here that could be support? Stuff like this. Right. If we come back to visit this level here, you want to buy that. Right. 4 boxes of stress and anxiety. For some, that may be too much. If it is, then limit yourself to 2 boxes and then consider switching your bias in box number 2 for 2 more boxes, right? So instead of playing 4 on 4 like me, play 2 on 2, right? You might be playing ping pong, whereas I play ping, 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 and then pong, pong, pong. Right, so let's red candle. It's just not deep enough. I want to see redder. Let's all get paid for this. Turnaround Tuesday. It typically applies to the indices, but in our case, because of the intermarket relationships, a lot of the money that leaves the S&P and the indices does trickle in the money markets, and turnaround Tuesday does sometimes express itself on what we have in front of us. Right. And so this is what we're doing. Playing for this so that we can sell up here maybe tomorrow, sometime before Thursday. This has been the plan literally all week. Right? Nothing has changed. It's the fact that we've been inside the measure bar, it adds to the probabilities, right? It adds to this idea that we might be onto something until the proof says otherwise. Right? So anyone caught chasing this because it was, going to the South Pole, they're starting to melt their snowman right around here. Let's see what happens next. There's my red candle. Can it go deeper? I need it deep down in here somewhere. All right. If it doesn't come to me, I don't want to click. Right. The trades are already there. I've already spent the money. I'm just now in the recycling business. Right. I just want to recycle the trades that are physically closing. And it's only because I'm still in that same box. Right. I don't want to take the trades from box number 4 and put them in box number 3. No. Right. Trades for box number 4 have to remain in box number 4 as like this as much as I can. Okay, so it looks like we may have found the low of the day. And now we're going to be testing in the opposite direction. Right? If we look at the dollar index to see what it's been doing while we've been pulling our hair out, right? The dollar index has found its way to resistance. And it's now trying to pull back off of that resistance. And so if the dollar is going up, it makes sense to see the euro go down. I think that's what we saw, right? That's what we just experienced. Let's see if this can now find its way to my break even, right? My break even right now is 13 pips, right? Because as the trades close, break even moves further away. If I recycle my trades, break even comes closer to me. Right? If I can see a red candle here, I'll recycle one trade. I am missing 2 trades from box number 3. There we go. All right, so now I want to see a red candlestick so that I can bring down my average. And I'll bring it down by opening another trade or 2. All right, so we're exploiting drawdown. And it's a limited amount of drawdown, so it's not a runaway train. We don't have runaway money, we don't have unlimited funds, but we do have consistency on our side, right? So I'm consistently recycling the same size trades, which is earning me the same amount of money over and over and over and over and over. And with that consistency, I earn the right to fight a few losses here and there. Right? So the few losses here and there are compensated for by me introducing a swing trade once in a while. Right? So I have a swing trade or multiple swings, and when they come to fruition, they kind of make up for that 1 or 2 loss that we had a week or 2 ago. Right? We have losses routinely, but more often than not, they're a lot less or managed in such a way that they don't impact your bottom line. Right? Getting back on the horse after taking the loss is one of the winning tickets right there, right? Getting back on the horse and making that next 3 pip trade, even though you just took a loss, the next winner is more important. In your psychology and in your brain, you want to be a winner more than you want to be a loser. And so if you just were forced to book a loss, force yourself to book your next 3 pip trade. Right? You're going to be feeling like a winner, even though you just lost. And getting back on the horse, recuperating 3 pips at a time, it doesn't take long. Your losses will have been washed away. Right? It's when you don't know how to lose and all you do is book losses, then it's kind of hard to recover from that. Right? So I just want to recycle the trade if I can, right in this zone here. Right? Box number 3 is allowed 4 clicks. I only have 1 or 2 in here. And so I just want to have a couple more trades that physically are allowed to be there. All right, so I'm just looking for a continuation on the plan. Nothing has changed. The strategy remains the same. It's one days, on some days it falls on your lap. The wind is in your sails, the tide's lifting your boat. And on some days, the tide is going out and all the boats are going down with it. That's what we did here, right? As the tide's pulling out, we're fastening, we're building a position to take advantage of when the tide is coming back in. Right? We know this is not directional. It's not a one straight shot to the moon or one straight shot to the South Pole. And by then taking that assumption and breaking it down into small, manageable pieces, the pieces end up being 4 boxes on average. And within those 4 boxes on average, you get to survive and or make money at the same time. Right? Surviving is way more important than making money. Right? Learn to fix the problems. And in the end, months of practice, you end up maybe creating fewer problems. Okay. It looks like we may have found the bottom with our box number 4, right? And as things are progressing back in our favor, the plan is working out. Let's recycle some of these trades. Right? The break even is right there in front of us, right? So we're clearly still in drawdown. I'm 7 pips in drawdown still. I've been in drawdown all morning, and yet the account has grown. We've been booking wins, and the drawdown is shrinking. Right? So the requirement is open trades so that you can close those trades. And so if you're going to be opening trades, you will be in drawdown. Don't be afraid of it. It's not a loss, right? A loss is a closed trade. That money is gone. These are all open trades. All right. And in due time and with a little bit of skill, I can minimize this and make it disappear altogether. Right? And depending on the regulations you have to operate within, if you're in the US, hedging is not part of the game, right? You don't have the ability to do this. And so you would have had to start booking losses had it gone down here. But you would not have booked everything at once. You would have booked layers upon layers upon layers upon layers upon layers, right? So it's only as it's progressing against you that you're earning or that you're losing. It's not an instantaneous, oh, I lost 4%. No. It's far from that. Right. So yeah, the freedom is there to exploit, and with a little bit of practice, a few years, this exploitation starts to pay off, but the practice is where the skill is in. The strategy, if it requires no human intervention, you can just program it and let her rip, right? But if there were such a strategy, we'd all be rich. We'd all have it, right? And there'd be nobody losing. Something sounds fishy with that. So yeah, automating a strategy still leaves the operator. And when I automated my little thesis, I ended up going back to trading it manually because it runs, but I don't want to be managing robots. I would rather be managing trades. So yeah, it is what it is. You know, there is a human piece to trading. This years of practice do pay off. Otherwise, you could just read a book and know how to trade. Right. So we're testing resistance right here. Right. And our assumption is that resistance will fail and we'll slowly find our way and be sellers at a higher high. Right. So you can almost see this like an outside range. It is what it is. Fun stuff. If you're wondering what the outside range is, I'm looking at this. Right. So who's to say this is not coming back up? So let's just see what happens next. We've built our position. We postpone gratification. We are finally getting paid. And along the way, we may get to recycle some of the trades that belong in box number 3 or in box number 2 and box number 1, right? I can't put box number 4 trades in box number 3 because the price may come back down and I may need those trades in box number 4, right? So I'm just putting the money that belongs where it needs to be. Right? Remember, the behavior comes from the box, right? The edges of the box are telling me a story. They're giving me confidence, or they're making me aware that something is changing or not happening. And that assessment is what I end up trading through. Right up here, you know, we were unable to get back to the top of the box, having fallen from the high. That's a pretty good sign that it's not trying to go up, right? And then breaking the boxes with all this unused time in the box, that's a pretty good sign there's more of that coming. And it did it multiple times. Ultimately, we did it 4 times. And now we're pushing off of the lows, right? We don't know where the ultimate destination is, but we can measure from this low on the way back up. And now we can see we've done one in a little bit, and we're ready to keep going and going and going and going. Right? So we're expecting this to work in this fashion. Break even is right there. If I spend a click right here, or maybe 2 clicks, maybe 3 clicks right there, you can see the white line is moving. Right? The white line is coming closer and closer to the current price action. And if I wanted to, I could take away the take profits and just allow price to get to my white line without closing profitable trades, right? So allowing for bigger than 3 pips. I already have trades for this, right? I already have swing trades on my book. And so I don't want to have more swing trades on my book. Right? So I'm just going to behave the way that I'm doing now, 3 pips, 3 pips, 3 pips, as the market slowly finds its way to equilibrium, somewhere in the middle. It could be at 50% of this range, right? We don't know. And so, yeah, not knowing is the fun part. What you do with not knowing becomes the challenge, you know. Go. That's what we want to see. Bouncing off of the lows or bouncing off of box number 4. And we're doing it in a consistent manner, right? It's not a skyrocket move back up. It's not, crashing through the bottom. It's behaving normally. All right, so let's just see what happens next. And then as such, we want to keep trading for 3 pips. If you have the opportunity to recycle, go ahead and recycle. Right? If you cannot recycle, so your money is tied up and it's not closing on its own, you have to wait. Otherwise, you're making yourself overtrade. You don't want to do that. Right? We could be totally wrong still. This could still be making lower lows. Right? This is why break even is so important, right? That box number 2 here, this white line here, that becomes the premise of the day. This is now the goal, right? Trying to get back to that white line. Anything above that white line is yours to keep. Right? And so we're doing this in a measured environment with a outcome in mind, predetermined outcome already in mind. And we're strategizing with plan B, C, D, E to survive. Eventually, the plan was either totally right or totally wrong. Whichever one comes next is what we build for, right? We're building for the unknown, but we're doing it based on the probability. So another 20 minutes and I'll have to let you guys go. We're still looking for that move above the white line. Time will tell if we go there or if we don't. And then the theory is this average is a reset, right? If we get to that white line, you can close everything, you get to keep your winnings, and you get to start over again, right? You can, well, it's not advisable because of time of day, but you can continue. I would choose to just go to the beach. Go find something else to do. Go find a new hobby. You consider this a business. Right? Building ships in a bottle would be nice. Right? So we're just looking for this retracement to be, breaking even or better. Yeah, there we go. That's the kind of stuff we want to see. There. Now you can see how closing the trades is relocating the break-even price, right? This gives us the ability to recycle the trades, right? By having closed the trades that were in box number 3, we can recycle these trades in this current box on that current candle right now. Right, so I just put the 4 clicks that belong in that box in the box, and I move the white line back down. Right? I'm not spending box number 4 clicks in box number 3. I'm only spending the money that belongs here. Right? If we recycle these trades, that will put me into box number 2 along the way, and then I'll be recycling box number 2 trades. All right, so this is it. This is the key moment right now, right? Box number 2, is it going back up into box number 3, right? Is it going up a third box? That would be a good sign, right? If it makes it a third box, can it make it a fourth? Right? So ideally, what we have is a normal market environment that's behaving normally without catalysts, right? It's not being pushed and pulled because of news. It's just market orders, sorry, the market filling orders. Right? Let's see if we can recycle a trade there if you have it. Right? If you can actually afford to take a trade, take it right now. Right? That's the last one that I can take for that box. And now I'm waiting for a little bounce back up. If we go back into box number 4, I'll be putting the trades that belong in box number 4. We're just looking for a move up in order to resolve the trades that are currently open. Right, so my premise is to look for this move right here. Right, this is what I want to do today. Right. We played the probabilities of an inside bar, and we're surviving the consequences. If you have a click, this would be a good place, right? Look left, we have all that support right here. Right, so take a note of what's happened. Right, we started on schedule, we experienced a pullback, we built a position in that environment. As such, we're starting to get paid about an hour later, right? And we've defined the risk. We've defined the goal, the target is to sell from a higher high. We did test the lower low. Right? And so this idea of the boxes is to keep you from panicking, right? It's to keep you from throwing in the towel before it's called for. Right? There's no reason to say you're wrong unless the proof is there. Right? This is it. This is the moment of truth, right? We want to be recovering from this. Fifteen more minutes, and I'll have to let you guys go. I will post a picture of the outcome in the video. Right? I am hoping to finish somewhere up here. And that could take 20 minutes, it could take 20 hours. Okay, so let's see. Bottom of the box. If you have money to spend, that's a good place to put it. We'll just leave that be the way it is right now. And we'll learn to survive. Oops, sorry. That was supposed to be in the other video. There we go. And right around here, you want to be buying support. Oh, what the hell? For some reason, I can't seem to log in to this platform. So having found the bottom of the box seems to be the ticket. I think we did the right thing there. Looks like the probabilities are playing through. Perfect. There you go. And so that's kind of what we're looking for. It's something like that. Move back up slowly but surely. Steady as she goes. Considering the amount of movement, right? This right there, 4 pips bigger than normal, right? That's the idea of the bell curve, right? We're not here for the accuracy. We're here for the ballpark. And then within the ballpark, 4 boxes worth, we can make money and recycle that event a few times. So you're controlling the risk and you're doing it within limits. Nothing is weird, nothing's crazy, nothing is absurd. It's just stressful, right? When things are upside down like this, it's stressful to be doing the opposite, right? Your brain wants to chase this. And here I am prompting you to do the opposite, right? Don't chase it because it's not going to the South Pole. Your brain thinks it is, but the facts tell us otherwise. And you and I are trading facts. Right? So you have the ability to make mistakes. You also have the ability to fix them. And you have to be You have the choice to say, oh, I was deadly wrong here, right? And then close early. Why fight? Why put up a fight if you're not comfortable, if you're, if you don't have a plan, if you don't have an exit strategy, right? You have to have that commitment to the loss. You're committed to be wrong at some point. You just don't know where that is until you get there, right? So in our case, we kind of determined that ahead of time. There we are, recycling some more trades. Right? Stay calm, everybody. This is just trading. Right? We want to buy support. If it pulls back, recycle some of your trades if you can. Right? I'm just looking to see a red candle. If I can see a red candle, I'll buy it. If it pushes up into box number 2, we get to recycle trades from box number 2, right? It's a whole new ball game. Stuff like that. It's right on the border. It's right, it's just, tickling our take profit. There we go. And now we can recycle trades. Okay, another 7 minutes or so. And I'll have to let you guys go. But like I said, I'll post a picture uh, at the opening of the video on how this session ended. Right? So maybe in the next few minutes, we'll get up to break even and I can close the book for today and keep our profits for today. We'll see. Right? Having moved back up a couple boxes, the anxiety should have diminished a little bit, right? Stress should have reduced a little. It's now, easier to think, right? It's easier to spend the money. When we see the plan working over and over and over, you don't want to be fighting a good thing. You don't want to fight something that statistically is the right thing to do. I think that's where a lot of guys will have issues, right? Fighting for something that uh, is a lost cause, right? So create the plan up front. Figure out when it's a lost cause before you start the battle, before you fight. And then you may end up being right in the end. You may end up having had the right plan all along. So yeah, it's knowing when to lose. Box number 2 is where you make that call. You lose in box number 2, or you choose to fight, and you're fighting because box 1 is not working, but you're not giving up on your bias. So you think over time box 1 might be working, right? This is kind of what I did here, right? Right away, box 1 failed. I ended up in box 2. I ended up in box 3. I ended up in box 4. And nowhere along the way did I give up on box 1. Right? I was adding to my existing position so that I can average with my existing position. And lo and behold, now I'm only 2 or 3 pips away from not losing anything. right? So I took a bad situation, and with a little bit of logic and a little bit of money, we made money out of a bad situation. It may even turn into a profitable day in the next 3 pips or so, right? So we'll see it as a group, in the next couple of minutes, uh, unfolding. And if it fails to push higher and higher and higher, and it does rotate and goes lower and lower and lower, we don't have to give up on the bias, but you can call it a day, come back tomorrow and do it again, right? Minimize the loss. You don't have to say, oh, I screwed up and then lose 36 pips on everything, right? Just lose what you need to lose so that you can stay in the game. And this is what we do. This is what we did, right? And in reality, we didn't lose anything today. Not a single loss, right? We protected ourselves. The stop losses were way down here. We came about, 5, 6 pips away from the stop losses because I have the idea that I'm here for hours upon hours upon hours. I'm protecting the downside with an edge, right? So, yeah, this is it here. We're almost at break even, right? I'm $4 away from breaking even on the day on everything that you see here in front of us, right? So let's take this take profit and move it up. This one here, right? Just so I can get to break even. I just don't want that white line to move if I close trades from here. Okay, so here we are in the box. I'm allowed to recycle trades in this box, right? I haven't closed any trades in this box, so I have to wait until 1 or 2 trades close so I can reopen them, right? But you can see the white line is 2.4 pips away, and we're almost there, right? Within a second or so, within a minute or two, we'll be able to say we had a successful day, right? We had winners at the front end. We had winners about an hour or two later, and we're about to experience an influx of more wins right now, right? So what I'm going to do, just for the sake of this session, right, is I'm going to close the winners that are below me. Right? I just want to book those winners. Right? So now all I have left is nothing but drawdown. Oops. No, that's not true. Let's take all these other winners. There we go. Right. So I took every winning trade off my book, and all I'm left with is $12 worth of drawdown. Right. So I'm going to let you guys go. I'm going to stop the recording, and then I'll post a picture of how this unfolded at the beginning of today's video when I post it. Okay. I'll let you guys go. This is it. Okay. Enjoy. Talk to you guys tomorrow. Same time. Trade safe. Bye-bye. Stop the recording.